Hello everyone, welcome to Bhadra IAS online Nagaland Civil Service Preparation Program. We are now coming out with a series of videos for your civil service preparation, and today I am going to discuss economics topic, what we call the national income topic for the economics subject. In this video, we are going to look at an important topic called the national income. So the first question is that we need to understand what do you mean by national income, how do you define and understand national income, because in exam you will get conceptual question on national income. Okay, so now if you look at it, generally what we say, national income is the production of goods and services. Whatever goods and services we produce, those goods and services are generally what we call the national income of a country. So when we talk about national income, it basically refers to production of the goods. When we say goods, goods can be agricultural goods, primary sector, or goods can be industrial sector. Okay, so production of goods can be agricultural goods, it can also be industrial goods. Services refers to all types of professionals, all type of like hotel, transport, tourism, communication, finance, education, healthcare, all that comes under the one category of services. So what is national income? National income is basically the production of all these goods and services in an economy in a period of 1 year. That is generally is the main basic concept of what do you mean by national income, right? So now let us go further. In primary sector, what are the things we find? Generally in primary sector, if you see, we have agriculture, livestock, forestry, fishing, mining and quarrying. All these things are put under primary sector. Similarly, we have a secondary sector where we have industrial products. And services, as I told you, all possible services are put under the services category. Now, the production of all these three in an economy is generally what we understand by national income. So national income measuring concepts, now we are going to look at exam point of view. These are very important. For example, what do you mean by GDP and what do you mean by NDP? What do we mean by GNI and NNI and per capita income? So these concepts today I am going to explain to you. For exam preparation, conceptual part, this kind of topic you will expect 100% there is a possibility. Okay, so let us start with the very first concept. What do you mean by GDP? The GDP, the gross domestic product. Basically, what is the GDP? It is defined as the money value. Means what? We don't say GDP is equal to production of some rice, some dal, some car, computer. We multiply these products by their market price, and that value of the rice or dal or computer or car, that is called the production value, and that value, money value, is the GDP. Clear now? So GDP is the money value of all the final goods and services produced in an economy. This is the definition for exam point of view you have to keep in mind. Now when we talk about GDP, one important concept is the concept of domestic territory. GDP refers to whatever we produce in our country's economic territory, domestic territory. So what do you mean by our economic territory and domestic territory? Normally we look at the map and say this map is our country, but in economics, when you talk about domestic economic territory, we include some more things. What are they? Now if you look at here, you will get a good idea. The domestic territory first refers to our political boundary, that is our map. Plus we have some control here in territorial water, that is the 200 nautical miles in the sea we have control. And whatever we produce here in this area, it also belongs to our domestic territory. Second point, ships, aircrafts operated by normal residents of the country, that means those who have been staying in India for some time. And third point is fishing vessels, oil, natural gas, whatever we are operating, say in this sea area, that also belongs to our territory ka GDP. Then very important one is this one, foreign embassy, consulate, military establishments of India, which is located in America, Russia, Japan, China, Korea, wherever. But they are considered to be our territory, and in that foreign embassy, whatever production takes place, it is added to India's GDP. Therefore, in the GDP concept, the main thing that you need to understand is what you mean by domestic territory or economic territory. So I have given you here the full detail. Okay, I will put this PDF file along with the video so that you can have a look at this information also for your preparation. Now let's look at the concept number 2, domestic product, that is the net value. So what do you mean by NDP? And what is the difference between GDP and NDP? So GDP generally we say is a gross value of production. So and what is NDP? From the gross value you minus depreciation. From the gross value you minus depreciation, it gives you net value. That is called NDP, right? So if you look at the NDP, GDP is the value of total production, but in this production we use capital which loses its value, and that value is what we call depreciation, and this depreciation has to be subtracted from GDP. So generally we say in national income accounting we don't use the term depreciation so much, but exam they can use it. The alternate term for depreciation is the consumption of fixed capital, what do we call CFC. Okay, so this is the basic idea of net domestic product. So what is the formula for net domestic product? It is GDP minus CFC. So the NDP is equal to GDP minus CFC, depreciation. Now look at concept number 3. Gross national income, GNI. Now what is GNI? How do we understand? First we said this is our country, our domestic territory, India. Whatever we produce here is our GDP. But what about Indians who are other countries? Say some are in America, some are in Japan, some are in Africa or UK, wherever. They are earning money and they are sending the money back to India. For example, you see here, money comes from say America, money comes from South America, money comes from Australia. This money is the income earned by Indians, but outside India. So when this income comes back to India, remittance, that is added to GDP, and when you add this to GDP, it becomes GNI. Clear? So very simple concept. What is the GNI? So GNI, therefore, formula is GDP plus net factor income from abroad. Clear? So whatever we produce here is GDP, and whatever comes from outside you add to GDP, that is the NFIA, you add this to GDP, it becomes GNI. The fourth concept is what we call net national income, NNI. So what is NNI? Same it is. From the gross, you minus the depreciation. Like how we did NDP. From GDP, you minus a depreciation, it is NDP. From GNI, you minus depreciation, it is NNI. Simple. Clear? So this concept is absolutely easy. You don't need to worry. So NNI is the GNI minus depreciation. Now exam may you might get one question, technically which is the national income? Technically the NNI is the national income. Suppose in your exam you get an option GDP, NDP, GNI, NNI, all four. Out of these four, which one is the national income? So it will be very confusing. So the correct answer is NNI is the national income. The fifth concept that we are discussing today is the concept of per capita income. Now what is the per capita income? It is basically the income available per person in a country. What does it mean? The total national income divided by the total population. It tells you how much income is available per head, per person in a country. Clear? That is the per capita income. Now exam may you have to keep in mind what is per capita income. It is the income available per person, and also important thing, it is used to estimate the development of a region or a state or country. This question came in prelims for Arunachal Ka exam. Arunachal Pradesh prelims, this question was asked, which of the following is used to estimate the development of a region or a state? Right? The answer will be per capita income. Clear? Okay. So today we have discussed these 5 concepts. GDP, NDP, GNI, NNI and per capita income. Okay. So now one more important concept I want to introduce to you. It is called national income at a market price and national income at factor cost. Normally when you say national income at market price, suppose I go to market to buy this pen, its price is say 100. What is included in the price? The cost of the production, raw material, advertisement, transport, all the charges, plus profit to the producer. But the third important thing is that indirect taxes, sales tax, service tax, whatever production tax, excise duty, these are called indirect taxes. These indirect taxes are added to this price of the pen in the market. So when GDP is estimated at market price, what do? We add the indirect taxes. So indirect taxes are included and we exclude minus subsidy. So adding indirect taxes minusing subsidy is called GDP at market price. Clear? Now exam point of view, important thing is this one. Since 2015 in India, we have been estimating GDP at market price. Clear? Since 2015 in India, we have been estimating GDP at market price. Opposite of this is the factor cost. Factor cost means income received by factor. So factors don't receive tax, they pay it, but government gives them subsidy which is received. So factors receive subsidy, therefore subsidies are plus. Factors pay taxes, therefore taxes are minus. So this is exactly opposite of market price. So from exam point of view, you might get question, what is GDP at market price, what is GDP at factor cost? You follow this formula. Clear? Okay. So for your exam preparation, if you require any further information, you can contact us at 8638391721. So you go through the video. I am sending one PDF file. You can have it along with the video for any reading. And if you have further information required, you can contact us at this number. Thank you.